My name is Marla Carlson. I'm the Executive Director at Sask Organics and the President of the Board of Organic Connections. Thank you for attending the call this morning. It looks like it's going to be another good one. I'm especially interested in weather given the harvest season this year, so that'll be interesting to hear what Bruce has to say or share with us. Just a little bit about the purpose of the call. The idea is to share collaboration between each other, to share resources, information, and build off of each other to increase capacity in the organic grain industry across the prairies. And this group meets the second Wednesday of each month with a guest speaker and a quick go around the people on the call to see what's going on in your part of the world. Just a reminder that you can press star 6 to mute your own line when you are not speaking to help avoid background noise, and star 6 to unmute your line. Please don't put yourself on hold in any way, because that often creates a high-pitched kind of tone for the rest of the folks on the call. So just jump off the call and dial back in. You can also use the mute feature on whatever phone you're using to call in. Just so that we know who's speaking, please state your name before you ask a question or make a comment. We have just over 20 folks on the call so far. There may be more joining, but thank you all for being here. And then later on in the call, we'll be, again, asking people what's going on in your organization. And we usually allow, depending on the number of people on the call and how many questions there are for the speakers, it's generally around 2 minutes each. Just maybe thinking about that as we're going through this morning. So I'll start by introducing our first speaker, Bruce Burnett from the Markets Farm Division of Glacier Farm Media. And he is going to talk about grains and oilseeds market outlook. Today, Bruce will share the overall fundamentals for the grains and oilseed markets, including the impacts of recent international trade disputes. He'll also discuss the organic markets and how they have reacted to the conventional price movements over the past year. So Bruce Burnett has been living and breathing Western Canadian agriculture for over 30 years. The combination of practical experience gained by growing up on a farm in Western Manitoba and years of monitoring global weather and markets for the Canadian Wheat Board gives Bruce a unique perspective on the agricultural markets. His specialty is the analysis of weather conditions and their impacts on global agricultural markets. Bruce is an enthusiastic speaker who will deliver an authoritative perspective on markets for crops grown in Western Canada. Bruce currently is the Director of Weather and Markets for Glacier Farm Media and resides in Winnipeg, Manitoba. Bruce will speak for approximately 15 minutes, and that will be followed by a question and answer session. So having said that, Bruce, over to you.
Thanks very much. So again, I'm going to have to probably whiz through these slides a little bit here, but again, you can read them afterwards for the background. My approach on this is we'll talk about some of the general overall themes that are impacting the markets, conventional, organic, or whatever. And at the tail end, I'm going to bring up some of the longer-term charts. Again, in Glacier Farm Media, we are the publisher of Organic Biz, online resource for the organic industry. But basically, we're taking some data from there as well. Again, in terms of the organic market, I'm not as plugged in as I should be probably to speak to you. But anyway, we'll give you some overall themes here, I think. So first slide, I just go through the current environment here. And I think the overarching thing on a global basis here is still this U.S.-China trade war. It's impacting agriculture as well as a number of other sectors. But certainly from an overall fundamental point of view, this is going to have a lot of impacts as farmers seed the winter wheat crops across the Northern Hemisphere this year and into next year as well. So it's something to keep a very close eye on. What we're seeing is a very large shift in global supply chains with China essentially moving away from the U.S., especially for oilseeds, soybeans in particular, and sourcing the oilseeds through alternate sources or South America for soybeans, of course, because of the way harvests are staggered. That creates some difficulties in the world, but it's certainly a transition that's been accelerated by this trade war, although it's been going on for a while. Second point is the dollar's been trading in a pretty tight range, Canadian dollar versus the U.S. dollar, between mostly 76 and 78 cents here. So that's something that we certainly have to keep a close eye on. I think that we're probably going to remain in a trading range here for a while. I was worried earlier in the year about oil prices, and certainly those have gone up, but they haven't supported the Canadian dollar as much, mostly because of some other issues out there. And certainly I think with the trade agreement now signed or potentially going to be signed here between Mexico, Canada, and the U.S., that some of the worries on the sell side about the dollar have evaporated as well. I think everybody on the call, if you're in farming or in the trade, harvest delays in Western Canada are a big thing. And I personally think that the people are underestimating here what could be the impact of this weather pattern that we've been in for about the last 4 to 6 weeks. Certainly, harvest is stalled out, and in particular in the northern growing areas, it's not looking positive in terms of getting this crop in, or at least all of this crop in before the snow flies. Not that that really hasn't already happened in most areas of the prairies. We've had some snow. Of course, it's melted in a lot of cases, but in some cases it's stuck around for a while, and it certainly makes for difficult harvest conditions. Large crops in the U.S., both corn and soybean crops, we'll get further confirmation on Thursday from USDA of this, but we're looking at large corn production, large soybean production. And I think for the U.S., the biggest concern then is, what are they going to do with all these soybeans that were being grown essentially to go to China that now have to find different homes. Summer drought in Europe and Russia, I think especially in the organic side of things, European demand probably going to be supplemented a little bit by some of the dry conditions, although again, that did result in a fairly good quality crop in Europe. Russian supplies have been reduced. That's going to drive wheat prices here, I think, over the next 6 months. And everybody's turning their focus now onto the southern hemisphere. How is planting going for their row crops? How is how is the winter wheat crop developing? Basically, Australia is still in a drought on the eastern side of the country, so that's going to have some impact in the markets. So quickly to go through the trade war issues. There's still details emerging from this, but supply managed sectors are probably the big losers in terms of Canadian giving up ground. We did some compromise on wheat grading as well. So that may mean some further movement north of the border of some U.S. Wheats. I don't think it's going to be a significant factor in either of the markets, to be honest, because I think there's just a limit geographically to what kind of movement we can see there. The trade war is going to last well into 2019. I'm actually fairly pessimistic in terms of getting it done before 2020. It just appears as if both sides are not going to be talking to each other for a while here. And watch out for potential economic slowdown. That's, I think, what the markets are worried about right now is, are we going to see demand slow in some of these countries because of the trade wars themselves? So quickly to the Canadian dollar chart. As you can see, we've been chopping around here over the past year, and this is a futures chart, so it's not the daily exchange rates, but we did on the futures hit a high in February of around 81 3/4, somewhere in there, and we have slid back. Certainly after hitting a temporary peak around 80 cents in late April or mid-April, we've gone downwards, and that's mostly based on the trade rhetoric that we've seen from the U.S. market became very, very concerned about the Canadian dollar. Overall, our economy has been performing fairly well, so I wouldn't say that the Canadian dollar is going to move too much further downwards here, but certainly I think the upside is limited as well because our economic growth is slower than in the U.S. And in the U.S., it looks as if they're going to be increasing interest rates almost as far as the eye can see here. It's going to be very difficult for the Bank of Canada to catch up to that or keep on the same pace without causing some slowdown in the Canadian economy. Speaking of the U.S. dollar, I think that's on a trade basis one of the more difficult things here that the markets are facing, especially agricultural markets. Most sales, again, are done in U.S. dollars. The U.S. dollar is at essentially going back, trying to test those highs that we saw in the middle of August. And I foresee that the U.S. dollar, as long as they're printing good economic numbers, and I see no reason why this wouldn't continue for at least the next quarter or two, you're going to see the dollar being supported. That just makes commodities in U.S. dollars being very expensive in some local currencies. Provides some competitors to the U.S. with some extreme advantages because, again, some currencies have been devalued, especially the Brazilian and Argentinian currencies. Those types of things, are going to create some trade distortions. But again, as I said, in Canada, we're trading in a fairly tight range, so I don't see that impacting Canada to the same extent. In other words, not a huge windfall on a depreciated currency there. Just a quick look at the growing season conditions. And I think basically, if you look, and this is just a percent of normal precipitation, essentially from the start of June to the beginning of September. And I think there's no secret here. Southern areas were dry, central areas were dry as well, and then the northern areas had sort of a normalish precipitation throughout the growing season. So if you look at crop prospects, and again, crop yield potentials have been increasing here as we've gone through the reporting series from Statistics Canada. We'll have to see where they shake out here, but I would anticipate that the numbers that we're sort of seeing now are pretty close to where we'll end up. The big concern for me, though, is that the really good crops were up in the northern growing areas. Let's say, from Saskatoon over into northern Alberta, into parts of Manitoba. We had some pretty good yields, and there's still crop left out. In some cases, there's a lot of crop left out. If you take a look at the next slide, this is the percent of average from the beginning of September, or from the first week in September, September 9th to October the 8th. You can see where the precipitation has fallen. The big anomaly in terms of precipitation has been in Alberta, essentially in the Edmonton area especially. We've seen well above normal precipitation for this type of year. It's come in the form of snow and rain, but it's not to dismiss other areas of the prairies as well. We've seen below normal temperatures throughout this entire period, along with not only rain, but some very frequent rains, I think, has been the big problem here. And we're looking now at harvesting a fair portion of the crop, and I currently estimate about 40% of the production in Western Canada is still out in swath or standing in field. That's going to be a tall order to do that here in what remains of October and November. So I'm fairly pessimistic here. I don't think the market's pricing in Canada leaving out, even if you look on it, probably best case scenario is to leave out 5 to 10% of the crop, and that'll be really a difficult period. We need some help from Mother Nature on that one. So that's a factor that I think to keep in mind as we go forward here. Even in the drier areas here up in the Peace River region, again, we see some slow harvest, and that's, again, mostly because of the cooler temperatures. Through September and early October, we've been running between 5 and 10 degrees below normal throughout that entire period. So let's turn quickly to wheat. Wheat stocks are declining in the world, so that's creating some support. The markets are disappointed, though, because they're not seeing a pickup in demand to some of the bellwether countries, especially the U.S. So that's keeping constraint on the futures to some extent. If you look at the Minneapolis futures here, you can see since harvest was over in the U.S., which was in September, early September, we really have done nothing with the spring wheat contracts. One thing to note, though, and I really want to emphasize this, wheat demand, spring wheat demand in particular, has been very strong, both in Canada and the U.S. We're seeing good exports from the U.S. We're seeing good exports in Canada. So the worldwide demand here is showing up for spring wheat. The reason that the futures haven't responded nearly as much is that the winter wheat demand has not been as people had anticipated. So those futures have dropped off, and spring wheat has more or less just treaded water. I expect that to change here in the coming months as we move through the marketing year and supplies get scarcer and scarcer. Another indicator, and this is again more on the low quality wheat side, this is just the Egyptian tenders for the Russian wheat. This is not comparable to Canadian wheats. It's about a 10% protein on our moisture basis. So it's a very low protein wheat. It's a very soft wheat. But again, you can see we're hitting back in the most recent tender at the beginning of the month. We did see beginning of the month we did see some values that are hitting back to close to the market highs. Just on the feed grain side, again, I said a large U.S. corn crop. We certainly have seen low futures prices for corn, although they've hung in a lot better than I would have expected given the conditions here. There will be some concerns about harvest progress. Those types of things crop up here, but corn prices, again, you can see are relatively cheap. Certainly, again, around that 360, 370 mark right now in U.S. dollars per bushel. The big drop-off has occurred in soybeans, and you can see here November soybean futures trading at about $10.50, so have all dropped all the way down here into the mid $8 range. Again, soybean demand globally has been fairly strong, but when one of the largest buyers does not buy your product, you see a very big drop-off. What's interesting in the soybean markets, and again, this is related to some of the non-GMO soybean markets too here, Canada can still export to China. We're seeing some very strong bids, on a cash basis in Western Canada, significantly above actually U.S. values just across the line. And lastly, canola. Just again, canola's sort of been following soybeans along here. We see a rise. I think of the crops that are vulnerable to being left out this year, canola, just by virtue of where it's growing, as well as flax in some areas too, is going to be really challenged here as we go forward. So just I wanted to show you a bit on the next slide here, the market outlook on the organic side. Here's the September spot bids. Again, once a month, Organic Biz calls around to folks like you and comes up with a price range here, as well as what the percentage to conventional is. So it's something that, again, doesn't give you a short-term market outlook, and certainly the September numbers are a bit dated now because of the fact that we're having these harvest difficulties, and that's certainly tightening the supplies of certain types of grains, and organic isn't an exception here. But certainly there's a wide range here. I'm just going to explore a few of them. One is the spring wheat prices here in September. As you see, we sort of peaked out in the organic markets somewhere around the beginning of the new year, and have been in decline here. we're starting to reverse that decline, I feel. Again, you can see, and again, part of this is because of the scale, but conventional prices have remained in a fairly tight range too when you widen the scale out here. So it's certainly a little bit more volatile, but again, with the harvest difficulties here and the strong spring wheat demand globally, both, I would say for conventional and organic, we're going to have to see these prices move up here, I think. The other market that's very interesting to me is pea prices, yellow peas. Again, trade restrictions in India continue to have some, to block our imports. And as a result, the markets have just drifted lower here. I think, again, on the pea side, we're probably going to see a pickup in demand here. I think, again, with the protein supplies, vegetable protein supplies starting to tighten in the global market here, I think we're probably going to see some uptick here on the pea prices. And lastly, just to go into the last organic grain that I selected, which was flax prices. And as I mentioned, a significant portion of our crops grown in eastern Saskatchewan, especially in the east central northeastern areas of that province. And harvest has been very, very slow, and flax is usually the last one off in those areas too. So it's something that I think is a big risk here this year of not being all harvested. It certainly will cause a contraction in supplies. We're looking at a smaller flax crop to begin with. And again, if we leave a significant portion, 10, 15% out in the field, that's certainly a concern here as we go forward, probably going to boost prices as we go into the marketing year here. Oh, and there's another flax price chart. That's an older one. Then for conclusions, I just want to emphasize organic, non-organic production, all of it's at risk here because of the harvest delays. Quality of the harvest, especially on the cereal grain side, wheat, barley, oats, is expected to be poor. I think we're going to see certainly a fair amount of feed being generated out of this crop. That's going to supply some much needed feed because feed prices have been going up because of concerns about supplies. Canola, spring wheat, flax, oats are probably the most vulnerable to this adverse weather. And again, that's just because these crops tend to be growing in the northern areas a little bit more. As I said in my talk about the organics, in September, it looks like we're setting the harvest lows, probably going to be going up. And the quality is going to be good for the first half of harvest, but second half, let's have no illusions about it. We're going to see a lot of lower quality grain being harvested from here on out. And that's all. Thank you very much for listening.